Hey guys, thanks for stopping by the TradingAnalyst.com. This is Taylor. We're going to take a look at the S&P 500. I'm going to discuss some levels, some philosophies, and some things that are going on in the market. Um, if you didn't catch the last video I did on the market, I believe I made it about 7 days ago. I go into a theory about the relationship between the S&P 500, the market, and bonds. And I think it's really important because it gives you a really clear picture of the longer term view here. I'm just going to throw out a hint here in case you don't want to watch that entire video, but essentially bonds are topping out. And I explain, I don't just say bonds are topping out, but I show you exactly why they're topping out, and show you other times that bonds have topped out. And every single time, about 10 times in the last 30 years, it has led to higher prices in the stock market every single time. Okay, so watch that video if you want some more details on that. The relationship between bonds and the market is very, very important. Okay, so now we're going to discuss the S&P 500. Like we mentioned last week, this is why you got to watch these videos. Okay, first and foremost, you got to watch these videos. If you want real-time trade alerts, you have to join our private membership group because these videos are great, but I'm actually sharing trades within the membership community. You have to pay to become a member of that. But regardless, this is why you got to watch these videos, because last week I called for some short-term downside when we were all the way up here. I said that we were going to come down to approximately right where we came down to, and that we were going to bounce right off of that level. We did that, okay? And here's why, all right? I'm not just going to sit here and toot my own horn, but here's why. Okay, we have this uptrend line right here. Started here. Actually, it goes back a little bit further, but a zoomed in chart is better. So we have, it started here, bounce, 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 bounce. Here's, and so we were anticipating a bounce against it once again. As you can see, that's exactly where we bounced at, okay? And we actually got long here, sent a text alert in real time to members at the tradinganalyst.com to get long S&P 500 calls, SPY calls, okay? We got long down here, and as you can see, we're very green already. The other reason we liked it for a bounce against this level, and again, this is important for you still, I'm not just trying to toot my own horn, but this is a level that's still there, okay? We could still come down and retrace back to this level, okay? Who knows if we're going to go straight up? We could chop around, but this is still going to be a big level here. And it's also a big level because if for some reason we lose it and we break these lows, the market could head much lower, okay? So that's another reason why you still got to pay attention to this level, all right? It's a great bounce zone, and if we break it significantly, then the market could head much lower, okay? The other reason we liked it for a bounce against this level is it was the Fibonacci retracement level. If you draw it from this major low to the major high up here, right there, boom, you can see the 61.8 Fibonacci retracement level right here, okay? It lines up perfectly with that trend line, all right? So we've got two things lining up so far. We also have a bunch of sideways trading right here. Sideways trading is what creates support and resistance, okay? So when you're above a level like we were right here and you come down to this level, okay, a lot of sideways trading, that makes it support, okay? If we break this level below and then we come back up, it's going to be resistance. But right now, we're still above these this big, thick support level right here. Remember, we traded sideways in August, basically in the entire month of August within this box right here, back and forth, back and forth, back and forth, and that created a ton of support. Also, on the upside, once we start to head higher, there's going to be a lot of resistance that we have to overcome. You can see, let me just Get rid of that so it cleans it up. Um, Resistance level up here at about just over 3,000. Let's call it 3025 on the S&P 500. You can see we topped out here, there, right here, right here. So that's going to be some resistance. If we continue to head higher, I could see us pausing there for a little bit. But if you notice here, the range is getting very tight. Okay, this swing was bigger. This one got smaller right here. This swing got smaller, and then this swing down got smaller. Okay, we're coiling up. Okay, in my opinion, for a big move, higher, right? Higher. Again, this could take several months to develop, but ultimately, I think we continue much, much higher in the market and continue to make new highs after new highs. All right. Now, I want to discuss something else. I made a post on StockTwits about it, but essentially, there's a lot of fear and uncertainty in investors right now. Right now, a lot of people, even bullish people who are typically bullish on the market, are uncertain about the market. You've got the impeachment talks about Trump. You've also got the trade war with China. You've got recession fears. These are the three main things that are kind of going around, and they're being inflated by the media. Okay, they're being inflated by the media. I personally don't watch TV. I don't read the news. I know about the news, but I'm not really getting deep involved into anything, and it's not creating a lot of emotions for me personally. I know the job of the media is to get clicks, and the job also of them is to make money by selling ad space. And the way that they do that is by getting more people to click and read and watch their content. Okay. And how do they do that? They do that by making things as sensational as possible. So even if it's a trusted news source, if you are left leaning, CNN, for example, I'm just throwing out a random media news outlet, even if you trust them, you're left leaning, their goal, they are a business, okay? And their business is to make money. And how do they do that? Again, by making content sensational. Same thing, if you're right leaning, Fox News, Fox Business, all that, their goal here is not to inform you, it is to make money, get more viewers, and sell more ad space. Okay, so both sides. Okay, their goal, and even media outlets that are supposedly non-biased, um, those media outlets, their goal is to make money. Their companies, they want to make revenue, they want to make profit. How do they do that? They sell ad space. Okay, so the reason I'm bringing this up is because there's a lot of stuff that is out there that no one seems to be covering from an objective standpoint. Okay, so my opinion about some things. I'm going to discuss the Trump trade war, the Trump impeachment, or the discussion of the impeachment, um, as well as the trade war with China, as well as the recession fears. Okay, and I want to throw this disclaimer out there. Um, if you are viewing me for the first time and meeting me for the first time, um, you might not know this, but I'm very agnostic politically. Okay, and I do this because it helps me navigate the markets when I'm not getting emotional about politics. So the reason I'm saying this is because everything that I'm saying is very objective. Okay, I am not uh, privy to, or I'm not held to any side of politics, the left or the right, or even in between. I don't care who's president. I don't care what they do. I don't care who you vote for, or anything about that. It's not going to make me, not going to change my life. All I care about is how it affects the market. So I'm discussing everything here, not from a political standpoint, but just from an objective standpoint on how I think it's affecting the market. And these things that I'm discussing here are things that a lot of people are worried about. Okay, a lot of people come to me and they talk to me about these things, and I see them in the news. So clearly, a lot of people are thinking about these things. So first and foremost, the Trump impeachment. There have only been 10 single-term presidents of all time. I think is Trump the 45th president, something like that. So less than what is that? Probably like 22% of all of the presidents. So about 78% of presidents are double-term presidents. All right. So the odds are in favor a of not only Trump not getting impeached, but of Trump getting reelected. Okay, and like it or not, his approval ratings are high. Again, I'm not getting political. These are just facts and objective talking about what's going on. Okay, so a lot of people are worried about President Trump getting impeached and how that will affect the market. I don't think he will get impeached. I think he will get reelected. Um, and this is something that a lot of people are worried about out there. And if you're thinking, well, not a lot of presidents have gotten impeachment brought up while they've been president. Well, we live in a time right now where um, it's very divisive. Okay, both the left and the right are very divisive, and politics is a lot more of a show right now, and there's a lot more theatrics and drama than there ever was before. So I think that talking about impeachment, it sounds very scary and like a big deal, but I think that it's all really BS, and that at the end of the day, it's not going to affect anything. The second thing is the trade war with China. I do ultimately think that we will end up having a deal with China, and that it will favor or at least be fair to the Americans, and it will be seen, because that's the most important thing, not actually what it is, but how it is viewed by investors and Americans and citizens of the United States. And I think that it will be viewed as a win for the United States. And the reason why I think we will end up making a deal is because China needs us way more than we need them. First and foremost, they piggyback off of the way that Americans do things. For example, the only reason their companies are making so much money um, is because they're, well, not the only reason, but a big reason, and a lot of the source of money that comes from their Chinese company growth is because they're able to be listed on the American exchanges. Okay, their stocks like Alibaba, Baidu, JD, those are the main ones that I can think of off the top of my head. They're all listed on the American exchanges, and billions of dollars are being pumped into those companies and making those CEOs and founders wealthy, and bringing that money back to China because of American money. All right, because of American money. Now, the other reason too that I think that it will be end up in the Americans' favor is because of the fact that we have tons of companies that are in China, and they're making money. China is making money off of American companies having factories and workers in China, and they're piggybacking off of American companies. Now, we can, just like Trump is talking about limiting the ability for Americans to invest in Chinese companies on the American exchanges. He's also talking about incentivizing American companies to come back to America from China. For example, one of the big dogs that just did it, they're not talking about doing it, they're actually doing it. Apple is moving their Mac factory from China to Texas, and they're going to infuse about, I think it was like $300 billion into the American economy just from that move. Or I'm sorry, 300 million. So, I forget. Yeah, 300 million. That would make more sense. Into the American economy just from that move alone. And they're just one of the first people to do it. So imagine if so many other companies do that. That's, hundreds of millions of dollars that China is going to be missing out on. The other thing too is that China is under a lot of pressure from their citizens. Okay, they've got a lot of protests that have been going on for I think like a year now, and it's very serious. Okay, this isn't Americans who just post on their social media things about the government. These are real people out in the streets day after day for almost a year now protesting the government. This is real stuff. And they're begging for democracy, which so happens to be something that America has. So not only are they under pressure, just plain and simple from their citizens, but they also are under pressure because their citizens want what the Americans have. Okay, they want democracy. This is something that um, all countries should have. So they're under a lot of pressure from their citizens. I could go on and on. There's so many other reasons, but those are the three main reasons. I think that China has a lot to lose, including all the tariffs that we can do on China. Yes, they can hit us back, but we can hit them so much harder with so many things. And ultimately, I think that we'll make a deal with China, and it will favor the Americans. The next thing is a recession, okay? Right now, the fact of the matter is the economy is good. It's good to great. Not all aspects of the economy are firing at 10 out of 10, firing on all cylinders, but most of it is. And there are some parts that are slowing a little bit, but that is just a natural part of the ebb and flow of the economy. Right now, we have the lowest unemployment rate ever. Okay, and if you're thinking, oh, well, because it's so great, it has to turn around. That is false. There are a lot of periods of time where we have amazing unemployment, and then it kind of flattens out a little bit and even raises a little bit, but then ends up we don't end up into a recession or anything like that. So I'm not going to discuss that in a lot of detail, but the fact of the matter is, if you look at the facts and the numbers, and just in the eye test, does it look like we're doing poorly as a company, as a country? If you look around, businesses are thriving, businesses are opening every day, people have money to spend, people are spending money, and everything looks great. But the only people that are so sure of a recession, of a looming recession, is the media, who again gets paid to make sensational and negative content. Negative content gets read and viewed way more than positive content. That is why they discuss the negative side of things so much, and it affects people. So if you're reading that stuff, you're going to think, oh yeah, we're heading into a recession, yada yada yada. But at the end of the day, the odds are stacked against that. So these are the three worries. I'm not going to talk your ear off anymore. We've got the Trump impeachment, not going to happen. We've got the trade war, it will be resolved in our favor. We've got the recession, most likely not going to happen anytime soon, right? So at the end of the day, and we also have a technical look here on the market that is primed for a breakout, primed for a breakout. I go into a lot more detail on the longer term view of the market here on the last market video I did about the actual structure of the chart here that is leading us to a breakout, but I just kind of want to discuss the more philosophical stuff in this video. But if you want to look at the charts, watch the video I did about 6 days ago, I believe, something like that. It's on the YouTube channel, it's on the blog, the last video I did on the market. So that's all I got. If you have any questions, please feel free to reach out to me. I'll be more than happy to chat with you. And like I mentioned before, I do have if you don't already know, a private membership group here at thetradinganalyst.com where I share real-time trade alerts via text message, okay? And what you're looking at right now on here is the real-time portfolio tracker, which tracks all of our closeout trades that we make and alert to members. You can see here all of the entries and the exits are alerted to members in real time via text message. You can see here the average win is almost double the size of the average loss. You can see here the total gains, the total profits of the last 13 months are almost $300,000, and that's following every single trade that we make here at thetradinganalyst.com and alert to paying clients. The wins and the losses and the break-even trades, everything gets factored into this profitability. And at the end of the day, the alerts are making money in the long run. Of course, we have winning streaks and losing streaks. Not every trade is a win, and that's just the reality of trading. But if you're looking for 100% winners, then I really suggest that you find a different service because that one doesn't really exist. So if you would like to make consistent returns in the market and have real-time trade alerts sent to you via text message so you can put money in your pocket each and every month, then sign up and join today. In addition to these alerts, you're also getting access to me personally via text, live chat, as well as email as well. I'm virtually available 24/7. I always have my phone with me, and it dings every time I get a message from a member. The other thing you're getting access to is private member videos. They're similar to the video that I made here, but they go into a lot more detail as far as the trades that we are in, as well as the trades that we are looking to get into, and it's all about preparing you and helping you learn our process. And our process is profitable, and you're going to learn exactly how to do that and grow as a trader. The other thing you're getting access to is I have a lot of pre-recorded educational content that I've done over the last 7 years. That's how long I've had this service. And you're getting access to over 15 hours of educational content in our video vault. And that is going to give you an insight into how we do things and how to make you a better trader. So if that all sounds great, I encourage you to sign up today. First and foremost, you're getting these trade alerts sent directly to your cell phone as early as tomorrow. So if you sign up today, you're going to start getting those alerts. Well, if you sign up today and the market's open, you're going to start getting those alerts immediately. So I encourage you to sign up. If you have any questions about anything that I discussed in this video, whether it be the S&P 500 or any of the 3 things that I discussed at the end of the video, or if you have any questions about the membership, please let me know. I'll be more than happy to answer your questions. Have a great rest of your day, and I hope to see you inside thetradinganalyst.com.